Hello everyone and welcome back to Super Sundays with FSM. My name is Troy, and as always we're going to get straight into the charts. What we're going to do is look at the same pairs we looked at last week, starting with gold. They did play out quite nicely, just as we said they would, and we're just going to go through the moves that happened and then give a brief outlook on this week. So first with gold on the weekly time frame, as you can see, I think that's the wrong gold chart. Yeah, gold on the weekly time frame. Last week's candle was a spinning top, suggesting that price failing to push higher, a bit of indecision, failing to close above this high for the past 2 weeks, pushed above and failed to close. If you go to the daily time frame, it is a bit clearer that things are still bullish. So higher highs and higher lows. It did play out as you said it would. So as a high was created up here, or before, if you look at last week's video, we did sort of guess where the high would be around here, but now we know where the high is. We put this up at the high and down at the low over here. It came down to the 61.8. It lined up perfectly with the level at 1721. So that's where you could have got long place the trade. Once you see it come down after this day here, so on Tuesday you could have set that order here, or once you see it come down to the yellow line, you go down to maybe a 4 hour, 1 hour, look at price action and then enter your long trade. So if you go to the 4 hour, once you see something like that, you can enter long, or we wait for further confirmation. We'll go down to the 1 hour and show you. But just to see for next week, if you want to get on board with this, we still have a long bias. So you wait for maybe a break of this trend line, maybe put Fibonacci on, and then look to get long around about this level here. Maybe 1728 is a little bit of support around here. I don't expect it to pull all the way back down to 1721. So maybe that level there, 1728.50, would be a nice level to get long from, or a break above anything and then a pullback, and then look to take longs from there. Yeah, so once you see this big move here come down, prices then just meandering around here, but then you get a nice bullish engulfing here, or wait for it to come up, pull back down to this level, and then take the long. So that was a nice trade there, played out quite nicely. If we now move on to cable, so cable on the weekly time frame, looking very, very nice. So what we're seeing here is last week's candle. Some would say this is an inverted hammer, which was a bullish sort of signal. However, how I'm seeing it is this candle opened here, pushed up, tried to push up nicely, got caught and pushed down by the resistance, and then closed with a long wick, showing up a lot of bearish pressure. The bears came back to push market back down. So in my eyes, this is a bullish signal. It's not a bullish candle, but it's not a bearish signal, but it is it's not a bearish price. So yeah, this is not necessarily a bearish candle, but it's a bearish signal in my eyes. So what I'd now go to do is look on the daily time frame. If we had a trend line marked out, and we had our level marked out from last week, so it didn't quite come back perfectly to the level, but I did say to everyone before, and also say that to my students all the time, price isn't perfect. You're not going to get it kiss the line all the time. It might push through or stop a little bit short before it reverses, and that's exactly what it did in this case. It stopped a little bit short and is now looking to come down. So once you see it close like this, I personally would probably maybe get long after this candle. So on the 10 p.m. on the 19th of May, you could have got short from that. Putting a Fibonacci on here, you can see that it also lined up nicely with the lows there, nicely with the 50 Fibonacci. So look to get short from there, or if you come down to the 4 hour, sorry, the charts look a bit messy because I've got to you look for the breaks of trend lines, but let me take that off. So yeah, so you're seeing it's in a nice area. As you can see, this Fibonacci was from this Fibonacci here is from the 1 hour. I'll go into that in a bit, but yeah, so once you see this candle here, it's a long shooting star, you can get short. That is a perfect short signal. It did happen a little bit late in the evening, so maybe you wouldn't go long there. Maybe you go long after the close of this candle. So at 6 p.m. the next day, So this candle closed at 10 p.m. 10 p.m. is a bit late to take a short unless you're doing from a daily time frame. And then about this candle now here is actually a nice candle to go short off of. So 6 p.m. on the 20th of May, you could have got short. Your stop loss would have been, you know, to be safe on here, 113 pips. If you're a bit more aggressive, just above this high here, 77 pips or so. But when you go down to the 1 hour, you get a lot better entries. So on the 1 hour, what we can see, in a trend line and an outer trend line. In a trend line, first touch, second, third around here. Once it broke, it was quite late at night. So in the morning, it pulled up here, and then, so let's say 6 a.m. is when I usually sort of look at the chart. So 6 a.m., the open of this candle, you could have got short. I might have, because I saw this bearish, I actually didn't take this trade, but I would have seen this bearish candlestick here, then look to get short from there. If you happen to be lucky to get in from there, stop loss, you can have it just above this high, so around 50-60 pips, or to be safe, 80 pips. And then first target is down at 2.2 to 1, which is a nice sort of risk reward. Ultimately, the target to the downside would have been around 120, we're given a 3.2 to 1. In another case, you would probably have this here, you maybe could have got short from again, was also would have had a bigger stop here, much bigger stop, at least 75 pips, more likely to be around the 90 to 100 pips sort of level, even maybe towards 110 pips. Quite big. I personally wouldn't have a stop that big on this, especially on the 1 hour time frame. You've got to wait for another opportunity, wait for the second trend line to break, or wait for it to pull back up as it did do. And, you know, once again, another shooting star, also an evening star, and this bearish engulfing. So that would have been a nice place to get short from, and that was 4 or 5 p.m. in the evening, which meant that it was a very nice trade. Kind of a tight stop, you know, anything from 50 to 80 pips would have been, would have been nice. Once again, same target. So that was a nice thing to do. If you also missed that, again, break and retest of this. So this is 1 touch, 2 touch. This would have been the 3rd touch. This is actually a perfect evening star sort of thing here. Short from this candle. It's a nice time of day as well. So short from there. Stop loss. I have a stop loss because it's a Fibonacci play. You can have it just above the 78.6 or on it, because it didn't quite touch the 61.8. So I'll have maybe a 50 pip stop loss. So yeah, 50 would be nice. And then you currently up around 1.2R, and then the target down at 120 would have been around 4.5R. So that was what we're looking for on cable this week. Looking to ride the trend down, so I wouldn't necessarily look to take any longs on this. Just wait for a pullback. So we're at this yellow level now. Breakdown, pullback either to this level or up here. I prefer it to come back up to the yellow level and then take shorts from there. But if it does pull down quite sort of drastically, it will come back up to this level here, the yellow one, and get short from there. So just ride a trend. It's a simple trend. If you can put on more trend lines, do so. But always wait for the 3rd touch and make sure it's a convincing 3rd touch, not just something you sort of imagine that off in there. This is actually a 3rd touch here. Could have got short from there. If we see anything, so wait for pullback up to this level and take shorts. Okay, so bearish on this currency pair. Finally, going to sterling yen. So going to the weekly very quickly, similar to cable, not quite as a bearish sort of signal, but similar case, still similar. So once again, if you look at this bearish, nice swinging lower, it did sort of come up all the way up to the 78.6 level, in line with this yellow level. So that was what we left and showed you guys last week. So that would have been a perfect trade. You have a nice small stop loss. I would have had it just above the high. So something like 110 pips. We can just say 100 pips. So 100 pips there. First target is 0 for a 3 to 1. Second target around a blue line at a 3.3, and then down, I think it was 128 at a 4.3 to 1. So looking quite nice for this here. we'll show you the Fibonacci a bit closer on the 4 hour time frame. But as you can see, this is looking to swing lower. So now to get short again, I wait for it to break below this level here, or even below this yellow line, pull back and take short. That's how we do trades. Nice, simple, nothing too complicated. We don't use, you know, all these different indicators, and that we look at raw price action and go from there. So as you can see now on the 4 hour time frame, looking quite nice. This is a 1 hour trend line. I'll show you that a bit later, and how you could have got short from up here. But now if you look, this is a nice level here. You could have got short on the close of this short shooting star. If not, price should hopefully break below this level, pull back up to this same level again, and then look to get short. That will be our ideal scenario to get back on board if you're not already in this trade. But quickly whizzing on to the 1 hour, as you can see, first, second, third touch, a nice break. These sort of doji here would have been a nice place to short. If not, this confirmation here of this bearish candle, bearish engulfing there, and then stop loss. Personally, I put it around about there, you know, so 90 pips plus. And then you know, that would have been a nice place to look to take a trade from. So you currently be up around almost 1 R. First target's down at 2.6 R, and then 128 is down at 4 R. So similar to cable, look to take shorts once you get pullback. So this would have been a nice place to take a short. Now we can look for it to break below this yellow line, pull back up and take a short, or if not, back up to here again. So you're always using Fibonacci's and trend lines with raw price action is the best way to go about things. It keeps it nice, clean, simple, and means that you you don't have to worry about your indicators, if it is it on the right setting or is it on the right time frame, all this sort of stuff. So just look at your raw price action, look at the way the trend is going on the higher time frame, and look to take your trades. So yeah, so similar bias as we had last week, guys. So long for gold and short on sterling yen and cable. So let's look to get on board on pullbacks. And yeah, guys, that's the end of this video. So we hope you have a wonderful trading week. Please, when you're watching these videos, leave likes, comments, subscribe to us. Let us know what you want us to analyze next week. And as you're trading this week, try to take initiative from our analysis and just don't trade blindly. Try and trade using your mind, guys. And yeah, I hope you have a wonderful week, and we'll see you next time.